Welcome back, friends, to another episode on the Central Pivot Range series, Chapter 3, brought to you by Trading Couch. In the last two videos, we learned about what is CPR, the basics of Central Pivot Range, how it is calculated, and what type of an indicator it is. In the second episode, we looked into the importance of the width of the CPR, what happens when a narrow CPR is formed, and what happens when there is a wide CPR on a given day, and how we have to trade it. And the third chapter will be dealing with respect to the concept of virgin CPR, which has been successful trade set up in the last 2 weeks. So buckle up and let's go. First, let's look into the concept of virgin CPR. So when we say the central pivot range as an indicator, we mean that the price wants to be in that particular zone, that is the zone of the central pivot range, and the price in that range has to be tested by the market before moving any further. Either it might be upwards or downwards. So that is the concept of CPR. So on a given day, it is expected that the price heads towards this zone and it tests this zone, and based on the rejection or the liking of the price by the traders, the price will have further move up or down. What exactly is virgin CPR? Virgin CPR on any given day is nothing but when the price on that day does not test the zone. So this CPR becomes virgin CPR for the next day trading. So what exactly happens in this next day trading is that, like, if a stock happens to open up and breaks this CPR, then it tends to come and test this virgin CPR, and this virgin CPR might either act as a strong support and push the price up, or it can consolidate here and the stock or the index might fall further from this level. So this is called as testing a particular zone. So when we know this concept of virgin CPR, and say for a trading session, we look back and find there are certain virgin CPR near the price levels at which we are currently, then we can predict that it might come to this level and take a support, or it might act as a resistance. Okay, and if the CPR or the virgin CPR is wide, then that happens to be more powerful as acting as a support or resistance, and if it is narrow, it has less chances of being a strong support or resistance. So let us look into some of the examples, and you will come to know as to how exactly virgin CPR is trading. Now let's look into an example. Here I have taken the NIFTY fin service index. So let's see this one particular day what happens. Now you can see here that this CPR remained untested in this entire day's session. So this CPR zone will be considered as a virgin CPR. I hope you're understanding the concept that on this particular given day, on the 23rd of Feb, the index failed to test this CPR zone. Okay, and this is considerably a wide CPR. So you can say that this can act as a strong virgin CPR for the next day's trading, if at all the price, and we can see that the price is almost near the CPR itself. Here the prediction for the next day's market is that if at all the price gaps up, okay, so this virgin CPR can act as a strong support and the price might continue to move up, and if at all the price might open below the CPR and test this zone, then this virgin CPR can act as a resistance and push the price further down. So let's see what happens in this given example. So you can see that the price was opened at the virgin CPR, and though now it is below the CPR, let's see what exactly happens here. You can see this a formation of a bearish rejection candle near the virgin CPR. This indicates a strong bearish signal, and leaving a long wick near the virgin CPR. This can act as a strong resistance here. So the price might continue to fall down. And you can see that on that particular day, the CPR is right below the price. So this can act as a magnetic trade and pull the price towards the CPR zone. And further, we can see that this is one of the important supply zones where we have seen a sharp spike in the bullishness of the market. So this can also be attractive to the traders, and the traders want to test this price. So we have all the indications and confluences of several indicators that the price might come down. So our entry would be taken right after the break of this candle, with the stop loss being there, and we can keep 1:2 as the ratio. So now you can see that how easily we could trade by knowing the concept of virgin CPR and the CPR levels. So here now that in this entire chart we have marked this strong supply zone, I just want to show you a snippet of how this supply zone that we have marked will help you get a winning trade. So let's see how knowing this supply zone helped the trader in booking a profitable trade. See, once we have learned a concept, it is all about our conviction as to how we are trading that particular uh, analysis or that particular concept. So you can see that the first candle, the open was away from the CPR and it was flat opening, and the first candle was a huge bearish candle. Who is not aware of this supply zone being in that position would assume that okay, it is a strong bearish market today, so let's short the market. But a person who knows about the strong supply zone and a person with strong conviction immediately enters right after the close of this candle. I'll tell you how it will play out. So my stop loss will be very minimal, that is right below the low of this particular wick, and my target would be the CPR, because I know that this is a wider CPR and the price will generally attract towards it. So let's see how the game plays out. Immediately I got a bullish candle in the second candle itself, and the next candle hit my target. So this is the conviction, guys, that I am talking about. When you know there are certain levels, and those levels have not yet tested. So this was a fresh supply zone that was there, and there are always buyers who will be waiting at this zone to buy the market again. So this is the beauty of technical analysis. I hope you got to understand how we learn the concepts of technical analysis and how we utilize in the market to make money. Sorry for the deviation. Let's get back to the topic. Now let's just continue with this day as to what exactly happened and how this day we could have traded the market. You can see that right after the big bullish candle, the market started falling back downwards. So you can say that at this point of time the price was rejected near the CPR and started to move backwards, that is move downwards. So here what we can see is whether now the trader will always have an apprehension that whether the stock is going to index is going to fall completely. Is it the reversal of the candle or continuation of the previous day? So that how do we get it confirmed is like we can use the Fibonacci tool here, one to the top of it, and see where exactly the stock is going to make a green candle or a consolidation. Okay, now say for example if we take this area, this 60% to 30% area, this area is very crucial, and once this area is broken and price sustains below this area, this 50% or 30 to 60 to 30% area of the Fibonacci or this upward movement, okay, the price is definitely going to fall further. So if at all the price sustains near this area and forms any bullish sort of bullish pattern, so any such pattern of which indicates a reversal from this, or which indicates a pullback, a valid pullback from this area, we can always trade the longer side. But provided we get a sharp closing above the CPR. Okay, let's see what happens here. Here you can observe that there is a double bottom pattern here, a proper break of the neckline as well with a strong bullish candle. So what this indicates is that this is this zone has acted as a valid pullback. Okay, so now we can expect the stock to move further up. But since the CPR is here, for me, still the long trade cannot be taken, as CPR can act as a strong resistance. Or any risky trader can take a trade here, like this could be the trade where we buy near the close of the candle, a stop loss below this two bullish candles, and target being the day's high. So this is quite a risky proposition, but in the market you can always have a risk reward ratio, and if at all, if that risk reward ratio is within your risk management, then you can play out the trade. You can see that here the index gave a strong closing, a strong bullish candle above the CPR, and a strong closing above the day's high. So this indicates that the market is in bullish momentum, but again we need a proper confirmation to continue from here, because this can be a fake breakout and can act as a trap to the buyers. And you can see that the breakout has happened in the last 3/4 of the candle. So this is not a valid breakout as such. So unless we get a proper confirmation, we are not going to trade this candle. Now let's continue. So one thing that you can observe here is the stock is giving a pullback. So let us see with our Fibonacci tool, that is from the recent low to the recent high, and see whether the pullback is happening near the 50% area. So if you see here, there is a confluence of this 60 to 30% area with the CPR. So this is a strong confluence area and a strong area where the index has to pull back. You can see that there are two bullish pin bar candles with long tails. So this is a proper confirmation, and we will be entering the trade here. You can see that our trade was successfully done, and we got the risk reward ratio that we had. So guys, the one takeaway from this particular example of the trade is that patience is virtue, and you have to believe in your analysis and stick to it. You cannot waver your mind based on the candles or the candle formations or the momentum of the market, or what any other suggestions have been given. Stick to the analysis that you have learnt and try to implement. Since the video has been stretched too long, I'll be explaining about the magnetic CPR trade in my chapter 4. So I'll end the video for chapter 3 here with another example. Okay guys, stay with me. I'll just finish off the video with one last example. So here we have found one virgin CPR, and as the day progressed, the CPR was not tested by the index. So we'll see when the virgin CPR will be tested. You can see that the next day the virgin CPR was not tested by the index. So let's wait and see whether the virgin CPR will be tested the next day. So you can see that even on the subsequent day, the CPR was not tested. So, but the price remains to be within the limits of the CPR. So let's see whether the CPR will be tested on this given day. So here we can see that there is a proper consolidation near the virgin CPR area, and there was a breakout of that. But still, let's not jump the gun. We'll wait for a proper bullish confirmation or proper reversal confirmation, and then take a trade. So here you can see that the index has moved further down, and there is a strong bearish candle near the virgin CPR. So if this region is broken and another strong bearish candle is closed below the virgin CPR, then we can say that the virgin CPR failed to act as a strong support and the price might move down. Or if at all there is a proper consolidation in this area and we get a bullish breakout showing that this virgin CPR is acting as a strong support, then we can take a long trade till the day's high being the target. So here we can see that the price is taking support from this virgin CPR. It failed to close below the virgin CPR, and it is trying to move upwards. So let's see if we get a proper confirmation, then we are going to take the trade. So you can see that you can see that the stock is moving upwards continuously, but there is a lack of momentum. So let's wait for a proper confirmation. Till then there is no trade. Okay, so now let's use the Fibonacci tool and see where exactly the pullback is going to play for us. This will be the area for us to take any entry, the area between the 50% to 60%. So this area will be our strong zone for a proper pullback confirmation. So now that we have got this area to be a proper pullback confirmation, we can take a trade here by having a stop loss below the recent candle and the target being the days probably open or even the days high. So though there is only short period time here, we can usually carry forward the trade and expect the index to move to our region in the next day as well. Okay, you can see that the next day CPR acted as a strong support and it held the price hit our target. So this way we trade the virgin CPR. I hope you have a clarity on the concept of virgin CPR and how it can be used for taking trades. So if you have any queries, please post it on the comments region. You know, we can clarify certain doubts and get the concept more clear. And thank you guys. Hope you liked this video and enjoyed the video. There's a lot of learning that has to be taken forward through this video. So let's meet again with chapter 4. Meanwhile, keep watching my videos. Your support is very precious to me, and thank you.